With me today, I have David Jane, fund manager at Premier Miton, responsible for running a number of multi-asset funds, including Premier Miton Cautious Multi-Asset. Hi, David. Nice to see you again.
Hi, Lee.
Well, I mean, looking ahead to 2021, as you know, all investors do at this time of year, are there any sort of top stock picks for the year ahead? And perhaps if you can name a few and why.
I think we tend to think in terms of themes rather than individual stocks, but I think one of the strongest themes, and it's sort of borne out by government action. One thing you have as we move from monetary policy into a more aggressive fiscal policy worldwide, you're seeing actually a very, very strong trend towards governments telling you what stocks to buy in many ways. So if you look at the European Recovery Programme, if you look at Joe Biden's sort of fiscal program going forward, it's likely very much to favour renewable energy, infrastructure investment, and so on and so forth. So I think that's going to be one of the key themes for coming years. It's been something we've been heavily exposed to for many years now already, but I do think governments are getting strongly behind that, even greater degree than they already are. So I would very much consider the renewables area as a growth theme. Another theme which again is quite benefiting from the situation we find ourselves in now would be your robotics theme. You know, the tendency to decouple from China, bring production back into the developed world will mean more and more investment in capital equipment, particularly labour-saving capital equipment. So I do think robotics is going to be another strong theme going through the next few years. And they're the areas that we're looking at very much at the moment, much more than perhaps, you know, the digital economy areas, which have seen such strong growth so far this year. It's hard to believe that they'll see better growth next year. I think you'll see better growth from renewables and robotics than perhaps the digital economy over coming years.
Now, when we spoke a year ago, you talked at length about ESG and the growth of ESG. So, I mean, it's become increasingly popular, as you predicted, over the past 12 months. What do you think of the theme now?
Absolutely not going away. That's quite clear. That more and more investors have ESG type mandates, more and more clients are interested in that as an ongoing investment theme. And so it underlies a lot of what we do in portfolios. You might see that as a little inconsistent with looking at banks and energy at the moment as the value recovery takes hold. But a number of our core themes, you know, whether they're renewables or other payment services type businesses or ratings agencies, is a very nice way of playing ESG. They're all coming through in portfolios and they're all likely to be very long-term investments. I think this is a theme, again, for the coming decade rather than just for 1 year.
And are there any particular stocks that you own and that you are playing that long-term theme with?
Aside from the renewables, one interesting area to look at to play the whole ESG theme is the rating agencies. A lot of, you know, whether it's Morningstar in our industry or Standard & Poor's in the bond industry, are all trying to get into ESG ratings. You know, they want governance ratings. Companies want to have these ratings and investors want to see these ratings. And so that's a whole new business stream for that industry. Moody's, Morningstar, S&P, MSCI, they all now have an extra business line that they didn't have, you know, sort of 2-3 years ago. And that's really driving another leg of growth to what is a really good quality cash generative growth business anyway. And so one of the nicest ways to play ESG is through the people that provide services to this growing industry, and hence the rating agencies look a very, very sort of canny way to play that.
David Jane, thank you very much for your time today.
Absolute pleasure. Thank you, Lee.